Hi, I hope you're all doing well. You see, when dealing with the CRA, deadlines are everything. A recent case in the Tax Court of Canada highlights what happens when a business owner misses key tax deadlines, no matter how clear the CRA's mistake may be. Today, we'll discuss this case and the critical lessons every business owner should learn from it. This case involves Amarpal Singh, who is a realtor in British Columbia. He operates through his personal real estate corporation. In the year 2019, his company received commission income from a single source, which is Nationwide Realty Corp. Now, Nationwide originally issued a T4A for just over $53,000 and then later issued an amended T4A for about $55,000. You see, the CRA, however, surprisingly added both amounts together instead of recognizing that the amended T4A replaced the original. And this resulted in a reassessment that, of course, overstated Singh's income by more than $53,000. Singh contacted the CRA and was told the issue would be fixed. But when the notice of reassessment was officially posted on his CRA online account, it still reflected the incorrect amount. You see, at this point, Singh had 90 days to file a notice of objection, but unfortunately he missed that deadline. There was still a second opportunity. He could have requested an extension within 1 year, but unfortunately he missed that deadline too. By the time he attempted to file an objection, it was already too late. The tax court had no choice but to dismiss his case. Even though the CRA made a clear mistake, the law does not allow the court to extend deadlines once they have been passed. So, what can we learn from this case? Lesson number 1. Always file the objection on time. The most important takeaway is this: never miss the objection deadline. You see, when dealing with tax reassessment, it is always safer to object first and sort out the details later. Filing an objection protects your right to appeal. And once the appeal is opened, other CRA agents can no longer take independent action on the file, which means the issue is handled through a formal process. This can make a significant difference in resolving disputes efficiently. Lesson number 2. The CRA can still reassess, but that's not the same as having appeal rights. The CRA has guidelines stating that it can reassess a taxpayer even after the objection deadline. However, what's often overlooked is that if the deadline passes, the CRA is no longer obligated to correct the mistake. And at this point, the taxpayer is relying entirely on the CRA's discretion rather than having a legal right to challenge the assessment. Well, the third lesson is don't ever rely on verbal assurances from CRA agents. You see, many taxpayers have been in a situation where a CRA agent suggests that no objection is necessary and that they just need time to correct the issue. You see, this case serves as a reminder that waiting for a correction without filing an objection is always a risk. If a CRA agent says an objection is not required, it's important to respond professionally but firmly. You can say, I appreciate that, but sorry, I cannot risk missing my deadline. I will file the objection while we work on getting this resolved. See, taking this proactive approach ensures that no rights are lost if the issue is not fixed in time. The fourth lesson is that you should monitor your CRA online account regularly. In this case, the CRA posted the reassessment to Singh's online account. The law considers this as officially received, whether or not he saw it. This means checking CRA accounts regularly is essential for staying on top of reassessment and, of course, the deadlines. The fifth lesson is you should always keep proper records of communication with the CRA. In this case, Singh did mention that a CRA agent had agreed with him over the phone about the incorrect reassessment, but there were no records to confirm this. The court had to rely on CRA's documented records instead. To avoid this situation, always keep a log of all communications with the CRA, including dates, agent names, and a summary of the discussion. If possible, request confirmation in writing. Good record keeping can be a lifesaver in case of disputes. So now, I'm gonna give you my closing thoughts. This case is an important reminder that procedural deadlines matter just as much as the actual tax calculations. Even when the CRA makes a mistake, failing to act within the allowed timeframes can leave taxpayers with no way to fix the issue, unfortunately. So for you business owners, realtors, and anyone dealing with the CRA, the key takeaway is simple. Be proactive, meet your deadlines, and never ever assume that the CRA will fix an issue without an objection being filed. Now, if you found this information helpful, consider subscribing for more insights on tax planning and small business finance. Let me know in the comments below if you've ever faced a reassessment issue and how did you handle it. Thanks for watching, and I'll see you in my next video. Until then, bye.